prevails, if you will. Okay. So where did we end up in 2024? 2024 was actually a good year overall from a global VC and growth capital perspective. We saw about 5.7 billion in growth capital come into the market globally across 230 deals. Um, and I'm going to break that down for you today. And we're going to look at the trends that are driving that. We're going to look at where the money went, what categories, what subcategories. Like usual, if you've been on any of these webinars before, it's the first time we're doing it on YouTube and LinkedIn Live. But I think if you have seen this before, we're going to follow a pretty standard path where we're going to dig into the numbers and talk about WorkTech's perspective as to what's happening and why. A little bit on WorkTech, just so you know where this information is coming from. WorkTech is a advisory and analyst firm. We really focus on the nexus of the growth capital coming into the space, global work tech and HR tech, the buyer trends, and the market trends. We pride ourselves on being the most trusted source of truth, of market intelligence globally. And I hope you get a sense for that today as we go through this. I'm going to come back to this slide a little later when we talk about some of the trends, but I think it's important to get on the same page as to, what do we mean when we talk about work tech? You'll see a lot of buzzwords thrown around, HR tech, work tech, talent tech, etc. In 2018, we started to see this shift from HR tech to work tech. And we see this as the evolution of HR tech. SaaS HR tech and looking at the new models, leveraging AI and agentic models and so forth. But this shift to work tech really opened up the shift and enabled the movement to embracing AI today in our space. It's basically about designing without ego. It's about data fluidity across platforms. It's about the ability to get at what you need, whether you're a user, whether you're a decision maker, whether you're looking for data, or whether you're looking for workflow across systems. And we've got a full report on this. But when we look at the enterprise, we think it's important not to confuse systems of work and systems of collaboration or enterprise technology like a Microsoft Viva or a Slack or an Asana, or foundational technologies like OpenAI right now, or Llama, looking at their LLM. It's important not to confuse that with work tech. While if everything is work tech, then nothing is work tech, is the way I look at it. And you'll see a lot of numbers floating around in the space, uh, much larger than the numbers that we're going to talk about today. Ours are very significant, but I think they conflate a lot of things outside of our space into this HR and work tech conversation. So this is how we see the world. It should look pretty familiar to you. Below that dotted line, we talk about employee experience, core work tech, hiring work tech, and talent work tech. So that's how we look at the world. So what did 2024 bring us? Was it a return to normal? I'm not so sure about that. Was it a rebound at 5.65 billion? Maybe. On the right here, we've got the annual look, right? So we've got what I call the HR tech VC frenzy, which was driven by all of 2021 at about 18 billion, and then 2022 at about 13 billion in VC coming into the space, largely driven by the first half of 2022. If you look at these year over year outside of the frenzy, 2024 looks like it's actually the biggest year we've had outside of the frenzy. 2019 was about 5 billion. So that's good. And then we look at the quarterly breakdown from 2017 to date, and you'll notice something here. Q3 was an a bit of an anomaly, right? We had nearly 3 billion in just Q3 of 2024, and that's because we had 9 deals worth. They were mega deals worth 100 million or more each, totaling about 2 billion. So when I back off the 2 billion, which I'm not sure if that's the way we should be looking at this or not, it leaves us at about 650 million, which is sort of on par with what we did in Q4 at about 560 million. That leaves us uh, looking at H2 at the second half of 2024 as more of a hesitancy, right? More of a decline from the first 2 quarters, which each brought in about 1.2 billion. And it looks like investors were paused, waiting for the market to turn, waiting for capital to just waiting to understand what was happening geopolitically, economically, and looking at how and where they wanted to deploy their funds. So more of that story around hesitancy and confusion that we got very used to, through 2023. So we've got an ongoing problem with the talent categories. And it started in 2023, but really it's super poignant here in 2024. Classically, we've always seen HCM as the leading category by a fairly good stretch in most years. But we've seen talent acquisition, especially, carry its weight, um, and year over year. But as the economy softened, as the job market softened, you can see that that changed in 2023, and it's looking pretty. It wasn't looking good for 2024 at all, with just a few 100 million going into talent acquisition. There are a lot of reasons why. Obviously, the job market being a big part of that, but I think investors really they like to see permanence, right? They like to see a good future, a long future when they're investing. I don't know anybody who doesn't call themselves a patient source of capital, but they like, one investor put it to me, sort of talent, technology comes and goes with market trends, but we've got to pay our people, we've got to provide benefits for our people, we've got to be compliant with whatever the regulatory issues of the day are, and that's where we see HCM and sort of the core offerings there really carrying the market through 2024. So it is what it is from a talent acquisition perspective. How did they break? How did the deals break down by round in 2024? You can see here that, like usual, sort of the private equity rounds had the most volume from a dollar perspective. But I think what was encouraging, we saw about 1 billion, I believe, between pre-seed, seed, and A rounds in 2024. So those early stage deals, um, that was a little more promising than what we had seen in 2023, I believe, and that's something that, I find encouraging because I spend a lot of time with startups and scale-ups that are, finding their way to funding. But the other trend that wouldn't come across in the chart is that, like we saw in 2023, we saw this, extension of rounds, right? We saw, we're going to open that A round again. We're gonna open that C round again, really across all of these stages, all of these rounds. We saw, trying to maintain that valuation while waiting for the climate to change from getting to that next round, if you will, and trying not to dilute ourselves as founders and whatnot. So this was, this is usually the way the chart looks when we look by round. I think what most people are really curious about are the subcategories. So while we look at three top categories with human capital, talent acquisition, and talent management. We track over, it's a growing list of subcategories as the tech evolves and the market evolves. Right now, it's about 60 subcategories that everything gets tracked against. And I think the big news in 2024 here is that you won't see in the top seven subcategories. We really don't see a talent acquisition category here. Normally, the top TA category is marketplaces and job boards, and really job boards getting major funding rounds. I believe there's about 200 million went to job board marketplaces in 2024, so it was in the top 12. But really, job board marketplaces were up in the top one, two, three consistently for the last 7 years, up until 2023, or the second half of 2022. The job boards that are getting dollars are providing more than a simple, job ad and candidate transaction. They're providing matching, they're providing some sort of career guidance, they're providing a niche, whether it's early career or other type of talent. But here are the top seven that did see dollars. I always separate the HCM platforms that are offering payroll, and here we saw a lot of emerging markets. You see, when we get to the country map, we really saw maybe the most global representation ever since we've been tracking this for the last 8 years or so. But we separate payroll from non-payroll HRIS, and I think that's an important distinction because payroll solutions come with a whole added level of complexity and market opportunity, if you will. Service delivery, something that was a new category in the last year or two that was added here. I wouldn't say it's a new category overall, but we're seeing more service providers, and in this case, it's an HCM service delivery provider, more service providers acquiring or developing their own tech in their go-to-market. Um, Benefits, again, just a fine point, the way we look at this, we're talking about benefits technology that is used by employers. So benefits admin or other applications that might represent an elective benefit or core benefits from an admin perspective. Collaboration and communication has been, yeah, again, if you've been on one of these with me before, this category for the last 4 years or so, quarterly has been in the top five or six. And it's an interesting space because we're trying to facilitate collaboration and communication across the HR tech stack, right? Across the employee experience versus what you're doing out in the enterprise stack with something like a Teams or a Slack or a Asana, et cetera, that type of collaboration. Learning, always one of the top categories. You can see the deals that carried these categories. Learning, while saw 280 million, the largest deal there was Sana at 55 million. And then financial wellness is a category that I think a lot of us have had our eye on for a couple of years. And it was interesting to see that pop into the top seven, but largely led by one deal with Purchasing Power, which is a they've got an interesting spin on their financial wellness offer, providing purchasing power to employees. They also have a direct to consumer play as well. So these are the top subcategories. The 60 categories, um, we have full data on that, every deal, every investor that participated. That's data that I tend to get into in a briefing call or an advisory with an advisory client. So that's something that I'm happy if you want to reach out and you have specific questions about other categories, how they fared, or going beyond this six or seven for this presentation. I usually, uh, cut the list down to the top, five to seven, depending on what's working on the screen. So what about AI? How is AI impacting this? Of course, AI is impacting this. When I talked about WorkTech really setting the stage for AI, I don't mean that as far as WorkTech setting the stage for AI holistically in the marketplace, but in our space. And what you see on the right side of the screen the six core tenets of WorkTech, and these were defined in 2019, pre-pandemic, before a lot of the mayhem that we've been, responding to in the market, whether it was the COVID surge or whether it was, sort of work from home, return to office, and then economic challenges. We could see these trends impacting the development of HR tech and how platforms and providers were moving away from the pack based on adopting employee first, experience driven, um, design forward, data fluid systems that were seeing rapid adoption. Um, AI is dependent on that data being fluid. It's dependent. The AI that we're seeing in our space, whether it's agentic or chatbot and conversational interfaces, it's focused on that experience. It's focused on being in the flow of work and leveraging data from multiple systems, not just in the HR tech stack, but across the enterprise. So AI is really embedded in every deal that we've seen for a couple of years now. I was at NASDAQ a couple of weeks ago on a panel discussion, and when they asked me about how AI is changing the HR tech market, my answer was basically, you've got to have an AI roadmap, you've got to have an AI story, or you're not going to see that any round at any stage, whether you're early stage, ABC round, or whether you're in a private equity portfolio. Every investor that I talk to is looking for how you're going to answer the buyer's demand for AI and efficiency and productivity and driving cost savings and better experience. So that's my AI spiel. There are some overall trends and opportunities that I promised I would talk about. We're good on time here, so I can spend a minute or two. I'm going to focus on talent acquisition, but these trends transcend talent acquisition in some ways, and I'll get into some of that. What I've seen, what my friends at Sapient Insights have seen, what my friends at Aptitude Research have seen with all of our work with buyers, is that buyers are really focusing around platforms. So there's a real shift back to the platform. Some of this is about having one throat to choke, right? It's about the creep of too many applications, too many point solutions in the market uh, or within my tech stack, and wanting to centralize in this time where budgets are tight and I'm not sure I'm getting the value across these applications. It's also less about the spend and less about some of that one throat to choke. And some of the buyers that I talk to are looking for one interface, if you will. But the platform play is also key to our future strategy as a buyer, as a user of technology, as we're embracing AI. As we know, AI needs data in order to be most effective. We need, as much data as possible. So by having a platform strategy, and sort of pushing my system of record into the back office, if you will, now my AI has, more to deal with. So the platforms that I'm talking about, while we start with the HCM platform, it then extends to, depending on the employer, depending on their workforce, depending on their priorities and their KPIs, it may extend normally into an applicant tracking system or recruitment platform. It extends into learning. It might extend into workforce management. Again, is my workforce more frontline? Is my workforce more knowledge worker based? So these the number of platforms, whether it's, one, two, three, or four, will vary from employer to employer, and what those platforms are will vary as well. It not only gets me into a more manageable and more cost-effective solution. Not only does it get me into a world where I'm able to leverage AI more effectively, but it allows me to uh, uh, appease IT from a data privacy, security, and ethics perspective as we continue to enter into this sort of AI age, if you will. The This really starts to speak to the increased value when we think about, especially in talent acquisition, where again, a lot of these trends I can take. We could just talk about payroll or talk about HRIS or learning, and have a similar conversation. But the value of the profile, the value of the employee profile or the candidate profile in recruitment is going through the roof. So, we used to talk about data being the new oil. Maybe it's the new gold. I don't know, but it's really fueling a lot of product roadmaps. It's also fueling a lot of decisions being made on the buyer side. So that this overall trend in the way AI is impacting the market, the shift to platform, everything we just talked about, it's creating some opportunities, and those opportunities are happening today. They're emerging in front of us. First off, the front line, and what we like to call in talent acquisition, high volume recruitment space, is is really setting the tone for what's about to happen to the knowledge workspace. So we've been bifurcating these two markets for a long time. We've got the frontline workforce, we've got systems and applications that we've created a tech stack for over there, and then we've got knowledge workers. And we even have this in one company when we've got systems and solutions that we've built to support that. We may have two ATSs. We may have a candidate experience, a different employee experience, leaning on workforce management in high volume and frontline, and leaning more on employee experience over on the knowledge worker side. This bifurcation is going to erode, and we're seeing, especially in TA, as I look into this year, we have the ability now, based on what we've learned in frontline, to really not just automate the entire process, and it's not about taking the humans out of the process, but it's about being more strategic with where the humans should be in the loop through any process in work or in HR. And we've really, I think, done incredible work to the point where now we've got in recruiting organizations and frontline organizations thousands of hires being made where recruiters are not transactionally, chasing transactions from a scheduling perspective or a funnel management perspective, but really looking more strategically about the quality of candidates, the spend that's generating these candidates, the allocation of resources for onboarding, the allocation of resources from an interview perspective once we get to that stage, becoming much more strategic. And there is zero reason why these concepts won't translate and aren't translating already into the world of the knowledge worker, into the enterprise on that side of that bifurcation. So it, you may have a very different process and a very different commitment to how much automation and where your humans are in the loop on the front line. You'll have a very different look and feel and experience for knowledge workers in that environment. But two systems, two processes, two licenses, et cetera, you're going to see a number of strategic moves in the talent acquisition platform space, in the HCM platform space, that are going to start to bring this together this year. And one of the biggest benefits of doing this is that visibility, that tie from a hire and onboarding and a retention perspective back to my recruitment ad spend. The market has always loved to beat up Indeed and LinkedIn, hello LinkedIn Live, for since they've been in existence, for the control that they have and that they wield over ad spend. And the connection between the source and a hire has been way harder to track across all market segments than it ever should have been. That's starting to erode based on the concepts that I just mentioned. And that's another reason why your CFO, your CHRO, your CEO is going to drive this transition into one platform, one mindset from a recruitment and talent acquisition perspective. It's going to be no different than the getting my spend in line, getting my licenses in line in a learning environment, in a payroll environment, etc. This is this is happening now, and it's going to, I think, speed up in the next quarter or two. Um, the skills-based trend is not going away, but it's a very complex issue. We've been oversold on that for quite some time, but we have seen some incredible um, gains in that front, and the promise that AI brings in helping us manage a competency model, a skills taxonomy, tying this together, doing it without needing a year of change management and translation to do this, I think is about to see enterprises in all market segments be able to embrace this almost, avoiding the painful change management based on, how AI is able to manage this data across the tech stack. Again, platforms like your applicant tracking system are going to move into the back of the tech stack as a system of record. And we're going to be aligning point solutions and where needed, things like assessment and so forth will be aligned based on our priorities. So I think that should get you thinking about what this means for other categories. And I'll be coming back on LinkedIn Live and YouTube Live to talk about those other categories. But with 45 minutes, we've only got, I wanted to focus in on talent acquisition because this is honestly where we've seen the most disruption from an investment perspective. It's where we're seeing most employers uh, focus on the ad spend and driving efficiency there, and where I think we're about to see the most disruption in the market today, or in 2025, I should say, as far as the changes that are going to be made and demanded by those employers. So I want to come back and talk about that platform shift. Now, this slide should make a little bit more sense to you when we start to think about that fluidity of that data, the sort of designing without the user interface in mind, without ego, if you will, so that the interface is the flow of work. This is really where I mean, I believed in this shift so much in 2018 that the company was renamed from InfoWinds to WorkTech. And it's we're living that transformation today. So we're moving from um, a model that today looks more like this, a lot of point solutions, a lot of sort of traditional, and I'm zeroing in on recruitment as you've seen me do before, and we're moving into uh, more of our this is an example of what a hiring work tech stack would look like. So it is a uh, obviously this is very confusing. A lot of licenses, a lot of vendors, especially when I start looking at a large employee population, a number of regions, etc., and starting to look at something that's a lot easier to manage based on the capabilities that are now coming into the market. I can dig in on this. I don't want